All right, I'll give the other stream here just a second to get caught up. Looks like, yep, it's just starting to get the stream live. We got about 13 minutes until the close, 12 now. So we'll take a look at how the market closes here. Right now looking like a bit of a doji bar, but we'll see where that is in a little bit of time. All right, let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for February 22nd, 2022. Q's down 0.81, SPY down 0.97, and IWM down 1.1. We've been bearish for the last week or so, ever since we broke underneath that hourly right here, if you recall. Once we got that gap down and broke underneath, we've stayed bearish. That was, last Wednesday. And we've stayed bearish. And just been in this hourly downtrend. Now, every time we get these rallies here, like we did on this gap down day, or even this morning, okay, these kind of rallies help keep this move sustainable, okay, because that's longs getting in, and then negating the move is the negation of a bullish event, and that is bearish, okay. So it's actually the same of the way that this move got started, okay, is that we had that rally, right? I forgot what it was. I think it might have been FOMC minutes, and then the very next day, right, that move was gone, right? So if you look at this move, I mean, there's no way to know that that's going to fail. That's just a bullish green bar that got follow through, and we even broke some resistance there, okay? And then negation of that is bearish. So we've seen that quite a bit here. Once we got going, we got follow through to that. We got a big rally here to end the day there, and then we gapped down. We erased it. Then we got a big rally in the morning, and then we erased that also. So you can see every time that these bounces get minimal follow through, get proven wrong. And what I've noticed too is a lot of these they happen fast, and then they kind of grind their way back lower as kind of, the move is shown that can't be sustained or that it's run out of steam. So as long as we have that hourly downtrend, and this daily is also remaining in this downtrend, right? Oh, we're going to be bearish, of course. Okay. The reason I kind of point these out is just because there's, I think with the downtrend in the market, always this temptation to think that maybe the bottom is in. Okay, and then when you see that it's like a big rip, like we got, I think this morning was a decent rally there. When you get these, that's kind of convincing also, but that's not that uncommon for bearish markets to get strong rallies back up, only to spend time giving them back, right? Maybe not quickly erasing it quite as quickly as the rally, but you just kind of have these like violent rallies, and then they don't hold, okay? And so we've seen that quite a bit in this move, and the point I'm trying to make is that, just the violent bounces off the lows usually are not how the market's going to bottom. If we go back even to like 2020, you'll see that, a lot of grinding, a lot of basing, a lot of kind of double bottom. It wasn't just a straight shot up off the bottom and then the start of the uptrend, okay? So just keep that in mind, is when these bullish moves get negated, that's just all the more bearish. It's more bearish than, us getting really extended down as we did kind of going into the end of the week last week. So every time we get those rallies, right, that's all the more bearish. So like right here, when we get extended, that's bearish for sure, but then you have to be expecting the rally. If you were tuned in with me this morning, right, we even kind of talked about a very similar situation just on the intraday. I said, we've got this grind lower, right, and now we're into these lows. We're probably going to break support, but it's probably not going to go right away. Wouldn't be surprised if we bounce right back up because of the way that we did it. Now, after the rally back up, right, after the bounce, if we give that away, right, then that's pretty bearish. Okay? All right, hopefully that makes sense. All right, let's go over the plays from today. Two plays here for me. One was Sammy's, one was mine. The nice OCG in there from Sammy. Here's the gap. You can see it's transitioning on the daily here. Gapping over multiple red bars there, clearing some resistance, although it didn't until it got going. But that was really nice. The OCG in. Nice big move there. So it did the pullback and then base. And then broke out from there. And had a pretty decent follow through there on the OCG in. My play was the IMRA. Similar on the daily in that it's transitioning. Not as good. You can see the 20 MA hasn't started to curl up yet, so that makes it more aggressive. OCG in has actually bounced and then was able to hold the bounce by basing. Right, this one is a really recent attempt at transitioning here. Okay, and then was a 5-minute buy setup right here. So we got a little bit follow through. Was looking decent. I like just basically the reward to risk potential. If this got going, if today was the day, if it was gonna rip, maybe we get some kind of move like the hook. Okay, hook, the way that this transitioned from a gap and then ripped up against this power trend. That's what I'm looking to do, especially with the market being weak. Anything that's showing, up or gapping up or basing at the highs is going to show relative strength. So we ended up killing this right at 57. I think I took a little penny or two slippage. It was overall, I think, like a 12-cent stop. So overall, I think we lost like half an hour, less than half an hour. It was a small loss. And then I was watching it for the afternoon, but I never quite was able to get going in the afternoon. So no extra play on that, no additional play. And then you can see here, it's actually going to close more towards the bottom now. So that's fine. On the IMRA. So it was acknowledged, I acknowledge that was a little bit aggressive, but it's with one of these that's just the reward to risk potential is what I'm looking for. Okay, so, and I think the management was fine. I also didn't like that. I got a little bit spready once it got moving too. That wasn't good, so that's why it was extra tight with the trail. Okay. And acknowledging that, when you're tight with the trail, you may have to replay. You may have to get back in if you get shaken out. Okay, and so that's why also, like I said, I was watching it through the rest of the day and just never set up quite right, which is fine. All right. So we'll see what we get here moving into tomorrow. What we're watching primarily on the Qs and SPY is this hourly downtrend. Okay, if we move up, and we try to, at the 20 MA, we try to roll over, and then we get halfway back to the lows or some partial way, and then move back up and take out the pivot, then we're not going to be bearish anymore. But as long as this hourly downtrend is intact, it's going to be bearish on the market. Now, on the daily, we don't really have a good kind of line in the sand here for where the daily we can be bullish. And I guess, hourly we'll have to see as well. Because as long as this kind of double top holds, even if we were to break this right here, this kind of bit of a lower high here, it's hard to be bullish right into that double top. So I think we're a bit of ways location wise to be really looking bullish on this as well, but we'll keep an eye on the hourly first, because the hourly will have to transition first before the daily does. Okay, so as we establish our bias day in, day out, hourly will clue us in. Okay, there are a little bit more potential here for macro news or things to create gaps and things, so just keep an eye out for that too, and then just make sure that you're managing risk appropriately. All right, that's going to do it for today's market wrap. Hope you had a nice day. We'll be back at it tomorrow. Have a good evening.